Hey everyone, welcome to this special session of Top Producers and our official launch of the Dominators of Commercial Real Estate Brokerage book. We're going to talk about that a lot today, but more importantly, we want to give you value and we make sure you're there. Hi, this is Rod Santomassimo, and welcome to the Massimo Show. The objective of the Massimo Show is to share how you can maximize your personal and professional margin. That's right. Let's make more money in less time. Let's turn chaos into clarity, confusion into confidence, and income into real wealth. Along with sharing my insight on how I grew a multi-million-dollar professional business, we will bring you expert advice from various authors, consultants, and industry leaders to provide you the tools you need to build that commercial real estate business and life you have always desired. Welcome to the Massimo Show. Before we get started, I'm going to ask these gentlemen to introduce themselves, these top producers, to share some insights of what's going on in the market. And we have one more guest coming later today. Mr. Bob Knakal is going to join us. He'll introduce himself at that time. So with that said, it is my pleasure to welcome everyone and two amazing friends, clients, and colleagues, and just incredible. I want to introduce first and foremost, Mr. Ken Ashley of Cushman Wakefield. Ken, welcome.
Thank you. Good to be here. It's an honor, Rod.
For those who may not know you, which I can't believe people won't know who you are, it's shocking. Tell us a little about yourself.
Well, married to Karen for 31 years. We have 4 great kids, and I started in commercial real estate with long black hair. Listen, I'm the luckiest guy in the world. We're so blessed. What I do in my day job is a tenant rep. So as I tell folks at cocktail parties, I represent companies, not buildings. And we help solve complex real estate problems. It's my favorite thing next to bird hunting. I love to solve the difficult problem and help people figure out how to get people back to the office or how to better locate their industrial facilities. I also say we like all flavors of ice cream, office, industrial, data center, call center, and land. All are fun challenges for us. And I've been at Cushman now for 28 years. And I've loved this business. I love this approach. I love the chapters are different every year. It's a different approach. It's a different economy. And the way you negotiate a lease or negotiate a deal is very different now than it was in 2019, for example. I teach at Cornet Global, a couple of classes over there. And I just love this format. And we founded something when COVID started called CREI, which stands for Commercial Real Estate Influencers. And we've got a great program that's going to be amazing at the CREI Summit. That's the website, CREISummit.com. Rod is going to be one of our great speakers. He's going to talk about AI and how to use that in commercial real estate. So we're thrilled, Rod, that you're going to be a speaker.
Awesome. And Ken, the clients he represents are incredible. His portfolio and his resume. He's a leader in the country for assisting corporations with their space needs and their facility needs. And we're going to get into that, especially what's going on in the economy today in office. But second, our special guest, Mr. Brad Ahrens, who is, I'll be transparent, both Ken and Brad have been clients of the Massimo Group. Brad is actually one of my business partners now in another venture. But Brad, can you introduce yourself, please?
Absolutely. So Brad Ahrens with Concord Development Partners. Been in commercial real estate since 2000, so 23 years. First started a business where we were wholesaling and syndicating and flipping different types of commercial assets, including some residential. Got into brokerage in 2006, met up with Rod in 2010, 2011, ended up getting out of brokerage in 2012. And have since been doing both development and investments for ourselves with more of a special focus on senior housing ground up, multifamily ground up. And then as of late, we now invest in a corporate housing venture. We have started kind of a sidecar fund for more value add opportunistic deals for office, retail, industrial. And then as Rod alluded to, him and I have also launched a investor coaching program that's now 6 months in the making.
We assist brokers who become professional investors because, Brad, we'll talk about that. It's completely different than brokering. It just is.
100%.
Okay, Ken, it's been almost 7 years since I wrote Teams Built to Dominate and focused on your team. A lot has changed, good, bad, and some ugly, right? So tell us right now, everyone's wondering, what's going on with office? How are we surviving office? How are tenant reps surviving? Ken, help them out.
Well, first of all, we haven't changed as a species in 3 years since COVID started. We still need to be together. Not everybody, not all the time, not every job type. And yes, it does depend a little bit about culturally, where you live. Let's just say in the United States, for example, Rust Belt different than Southern California. But what is interesting is the transition was already underway. If you look at occupancy and usage in 2019, we could see the data trending down of badge swipes were trending down. COVID only accelerated what happened. And I think it was in 2007 when the iPhone was created, and it took a few years for the technology to get far enough along. But we actually, for most knowledge workers, and that's what we're talking about here, we're not talking about the security guard that has to stand a post, but knowledge workers that have optionality, you haven't had to go to the office for a while. So now we're shifting and we're thinking about why you would go to the office. And I wrote a thing called FOMAP. One of the reasons I think we'll go back to the office is, especially young people, they're worried about their jobs, but FOMAP, fear of missing a promotion. I mean, listen, when we started our careers, you turned on the lights and you turned off the lights as a way to demonstrate your commitment to work. That hasn't gone away. I think the final thing I'd say about this, there's a lot of worrying about the asset class that is office. But as I tweeted last night, I'm optimistic. I think, yes, there is trouble in some asset classes and some locations in office. There's no doubt about it. Remember, we were pretty frothy in 2019. A lot of people overpaid for the product. That's unfortunate. But we had the black swan event of COVID. I'm looking for the white swan. What's going to happen that could turn this thing around more quickly than we thought?
Okay. So can I come back to you? Because I think you're telling me, and we all know this, right now we're focusing on relationships, and you have a cadence you talk about in the new book about this ABC format. I want to come back to you and ask you about that. Brad, let's go right to you right now, and let's talk about relationships, because right now relationships are shifting from what investors thought and lenders thought. So what are you seeing right now going on in the marketplace, and how are you dealing with these variables and these concerns?
So I would say we started paying probably extra close attention to the market when February of last year, there was an inverted yield curve, which historically indicates something is going to occur in the future. Plus, we also started to notice primarily in 2022, right, when you start to see presentations and packages being presented that suggest year-over-year rent increase is well beyond normal, expenses remaining relatively constant, debt markets continuing to remain flat, yet values, especially when you start to see the same deal trade 3 times in the last 3 years, and every time it's doubling in value, right? So that was a bit alarming to us. And some of the ways that we've navigated is we probably looked at more deals last year, chased a few, but really kind of honed in and just was paying attention to what was going on. Plus, as soon as the first interest rate hike started, we started looking at the forward yield curve to see kind of what's being projected out almost over the next 30 years based on kind of best practices. And then as far as how we're navigating, I got to tell you guys, like, moments like these, I love, because we've been in such a transactional mindset for like the last 6-7 years that this little correction, right? Whether it's going to be a big recession, a correction, maybe more of getting back to normal, we use this time as like, look, everyone's been so busy working on deals that it's really hard to enhance market share and increase those relationships. So as soon as things started to kind of get a little bit crazy and wonky, we did 2 things. One, once we realized that we were here and everything that was going on, I got to tell you, we stopped reading the news, right? The doom and gloom of everything that's out there. You know it's there, but it doesn't need to be pounded into your head every day, because that creates insecurity, it creates fear, and frankly, it deviates from the blocking and tackling that you need to do every day. So instead, we have expanded our platform. We're having more meetings, more conversations with new investors, new debt providers, sellers. And the reality is everyone is still there to transact, right? It's just you underwrite differently, valuations are different. But in essence, we're using this time to kind of make our shop even better, improve processes, improve procedures, expand our relationships, having more meetings. And just by doing so, you kind of forget the noise, your head's down, and we've probably uncovered more opportunities just by picking up the phone again than just relying on deal flow inbound, which has completely pivoted the entire team's attitude on where we are today and what's ahead of us in the future. It's incredible.
It is. And for some context, for those who aren't familiar with Brad, Brad is one of my original clients at the Massimo Group. I mean, Brad, I think we were working together in 2010, I think. Yeah. And he was a young gun in my first book, Brokers Who Dominate. And for those of you that may be young guns, I mean, we're going to get to a minute with Brad in a few minutes of how he's completely transformed everything he does from being a leasing broker, sales broker to now having this amazing development platform. But I want everyone to understand, I'm so proud of the kid. I mean, to me, he's a kid, but it's amazing what you can do when you have a commitment to commercial real estate. So let's go back to Ken. Ken, in the book, you talk about this relationship management ABC format. Yeah, help us understand what that is.
Sure. Well, to zoom out just a little bit, I think in business development, and Bob Knakal has got some fascinating stuff that maybe he'll share and some notes that he's created around this as well. But in business development, and now I'm speaking about really life as a tenant rep, but it can apply to other areas of commercial real estate. There are two things you have to do to be successful. Once you've identified who your prospects are, there's sales, which is speaking and listening with the intent to convince. And then there's marketing. And marketing is how you create your brand, your identity. And marketing doesn't have to be across the United States. It can be, if you want to focus on one type of product in one county in your metro, how do you become the leading expert so that people think about you? And the reason marketing is so important is statistically, you can't call someone on the day that they need you. They need to trust you, they need to believe in you, and they need to remember you when they need you. But we also can't rely on prospects just to have this elephant-like memory. We have to remind them. And that's why reaching out, and I don't call it cold calling, it's direct contact calling. I'm calling someone with a message, and it can be as simple as, may I spend just 6 minutes with a thoughtful conversation about what is going on in the market that will impact your business from a commercial real estate perspective. Because commercial real estate for most companies is the second biggest cost after labor. It's a big needle mover. And let's just see at the end if there's anything that's interesting and any action steps that you could take to help capitalize on the current market. And I'll say, by the way, they have a sale in real estate. It was really nice of them to have a summer discount of rental rates. What is the ABC system? Well, Vilfredo Pareto, the Pareto principle, the 80-20 rule. Vilfredo was an interesting guy who was an Italian economist in the 1800s. And he came up with an idea that auto manufacturers then translated into the 80-20 principle. And most of you are familiar with that. 20% of your efforts generate 80% of your results. Every hour you spend in the week isn't equal. There are some hours that are much more powerful. And the same is true for prospects. So let me break it down this way. We think there's a universe of about 800 people for most tenant reps. That's the most you can handle. And no disrespect to anybody, but we're trying to do business for capitalists. So the bottom 500 are people that we just kind of got an idea that something might happen or they're in our marketplace. Those are the Christmas connections. Call them in December. How you doing? Anything new, buddy? The B level are people that are getting around to it, that there could be something happening and you're monitoring a lease expiration or something kind of a few years out. So that's about 200 people. And the 100 people, those are people you're actively pursuing and perhaps even pitching. And so if you come up with a call regimen, and you can tweak this any way you want, if you call the A list 4 times a year, that's 8 calls a week. If you call the B list 2 times a year, that's 8 calls a week. So that's 16 calls before you get to the C. Now, some people, I'm aware, make 100 cold calls a day. That's great. That's not what I want to do at this stage of my career. 16 is plenty for me. That's the answer to the question, Rob.
Okay. So for you, is that a cadence that you structure formally and religiously within your practice? Is that how it looks?
Yeah, we use, you can use any CRM you want, but when I come in, the CRM pops up and it says, okay, here are the 3 or 4 or 5 calls that you need to make today. And I'm also sensitive to when we're calling people. I don't call people on Monday mornings. People have different approaches on this. Mm-hmm. And I typically don't try to call people on Friday afternoon. And I structure outgoing calls as much as I can towards the end of the week because people are in a better mood Thursday and Friday.
People are in a better mood Thursday and Friday. Okay. Let's go the opposite of not so good moods. Brad, not that you're not in a good mood. That was the pandemic. So Brad, during the pandemic, you made some changes, some shifts. What did you do purposefully, and then maybe in hindsight should have done during the pandemic to continue the flow of deals from your perspective?
Great question. So during the pandemic, we had 2 sides of the equation, right? There's new business development and managing active projects. And I'll tackle maybe the easier one of the two. So managing active projects. So to give you a little glimpse, so in 2019, we actually rolled out one of our first expansions into California. We had a ground-up development deal that we were taking through entitlements, which means we were in the process of getting zoning approved, perfected, to ultimately submit plans to build 132-unit senior housing project in South Orange County. And here's what's crazy. So it took us 2.5 years to get through the entitlement process. We got city council approval 2 weeks before the pandemic hit. 2 weeks, which would have been next to impossible without that face-to-face time with zoning officials, planning commissioners, city council folks. And so that was that point in time. And then it's how do you navigate a project moving forward during the pandemic? And we use some tactics that we're using now, right? Kind of looking forward for risk mitigation. So one thing that we did during the pandemic is we made sure that between all of our consultants, architects, civil, electrical, you name it, we're on a self-sustained platform that could handle virtual, right? We've all gotten really good at it, but you got to think back 3 years ago, right? That was a new dynamic, right? Actually having to work in a remote environment. So we were able to perfect that. And then as we kind of forward look on as supply chain issues became challenging, right? Getting a head start on pre-ordering a lot of commodities and materials. Most importantly is when we started to see lumber commodities rise, we actually bought a ton of advanced labor, stockpiled it in a warehouse in Cleveland. So when that project became vertical, we already had the lumber to build our project versus having to pay 25, 33% more for lumber as most developers were during the pandemic. So that's kind of pursuit side. We also got lucky where
I'm going to stop you for 1 second because you both have such subconscious competence. That is crazy. I want everyone to understand what Brad's already talked about, the yield curve projections, now lumber prices. These are things most brokers don't think about and how to serve their client. And that's why they're dominators. And that's why they're in the new book, because you need to do this. This is an element of going beyond the real estate into real life. That's the key. So Brad, I didn't interrupt. That's a great point. Keep on going.
You bet. And again, that's like the biggest thing is not looking, right? When we look at projects, we look at our entire business plan from start to finish, not just a snippet in time. So if there are known elements today that I can mitigate through underwriting or modifying our business plan, we will implement those now, right? And if things end up being better than we had forecasted, the project, our investors only do that much better. Now, going back to pandemic, right? We also had another lucky event. We sold one of our projects actually to a Asian family office 1 week before Arizona got shut down. I remember I had so many friends being like, oh my gosh, you're brilliant. And it's like, yeah, that one was total luck. But looking back, what I wish we would have done is because the pandemic came on so quick that I will say, as far as new business pursuits, right? Everyone froze. It was more of like, let's manage our projects. Let's get them kind of continue pushing forward on what we have in the queue. But as far as new business development, it was just like, I don't know what to do. And looking back, now having gone through a pandemic or even a market adjustment that's not a normal market cycle, like kind of what we're in now, it would still be, okay, maybe take a breath, right? Refocus, look down, follow your business plan you had laid out before anything had occurred, heads down and continue pushing forward. And just with what like underwriting and adjusting to those market intricacies, but still pushing forward. Because guess what? As soon as the pandemic started to lighten up, at least in Arizona, we were almost playing like 4 weeks of catch up to kind of get caught back up, continue pushing forward, and just heads down. That's it.
Good. Ken, I'm going to take you a different direction than I suggested to you for a second here, because that's a leeway to you. Office brokers, office tenant reps, right now, they're in a similar situation of everything is being put on hold, basically, or leases are becoming short-term leases. So what type of strategies are you seeing right now that are more advantageous than others?
Well, first of all, I'll give you a couple of positive things to think about. If you're an office tenant rep, there is more opportunity now than ever for a couple reasons. Unfortunately, some of our colleagues are leaving this profession for a variety of reasons. They're younger, they couldn't sustain, so there's less competition. The second thing is that decisions actually are starting to be made. There's beginning to be some consensus around how we're going to return to work. So there's a lot of opportunity. Number three, you mentioned, Rod, short term, you're correct. But corporates are getting two things wrong right now. They're taking too little space for too little time. Remember, I just joked about the discount sale on real estate. Mm-hmm. And I wrote a thing recently called "Are We Putting on Skinny Jeans Before Thanksgiving?" which posits the idea that CFOs are having big wins, but they are unfortunately going to be incorrect. In 25 and 26, tenant reps are going to be very busy for three reasons. One, more people are going to be coming back to work. Number two, we're going to be hiring. And number three, we're going to need more square footage per person. So the market is shifting, and it's shifting quickly. So listen, hustle is a strategy. And if you will simply focus, make your calls, there is business out there. We're no longer in the middle of COVID. And Brad is right. There was a total freeze in decision-making because beta was so big. Now people are ready to get back to business.
Great. Okay, I'm going to take a second question. You are the leader in the industry in regards to social media. You've taken it upon yourself. You've created this fantastic event, this fantastic organization that focuses on individuals that are influencing others in our industry. So last 5 years, the evolution of social media, what have you seen? And now with AI, what do you project?
Well, first of all, social media is a fantastic medium. I mean, our mutual friend, Bob Knakal, if you don't follow him on Twitter, you should. He's a guy who's been in his career a long time, and he adopted social media recently. And now he and I had dinner a few weeks ago. He just can't believe how amazing it is. What it is a great free way to spread your brand and your message. What it is not is a vending machine. You don't just go on Twitter and deals pop out the other end. Sales and marketing, remember, sales is reaching out to people. That's the verb. Maybe marketing is the adjective. So using social media is a very powerful medium. And then I wrote a thing called the Social Media Action Plan for Commercial Real Estate Professionals. Long title. Rod can help me with a better title. But if you go to kenashleycre.com, it's at the top of the Knowledge Center. It's free. And what that document posits is that if you create four corners of what you'll talk about, then you'll keep yourself out of trouble. And briefly, for me, it's macro commercial real estate trends. Nobody cares if you have a sublease in Philadelphia. It's having to do anything with technology because people are generally interested in improving their technology. It's management science, how to lead your team, set your goals, be better as an executive, and then anything positive. So those are the things that I talk about online. What I won't talk about: art, history, politics, sports, except when the Bulldogs are playing, a lot of things. And so there's some focus to social media. So it's a wonderful platform. Thank you for the plug of the CREI Summit. I believe iron sharpens iron, and we're getting some of the best in the industry together. What's the future? There's a huge rush of people that are adopting social media in our industry. But one of the challenges in the future is going to be standing out and making your content more and more crisp. How do you get followers? How do you get people to pay attention? It's because you're thoughtful and you're intentional. And you think about, and I think Brad said this at the top, who you're talking to. In my case, I'm imagining that there's a CFO that's consuming the content. Maybe she isn't, but that's how I think about it. And so I'm very focused on trends around the person that would consume my real estate and trying to bring them frontline information, the latest that's happening. Finally, AI. It's an interesting tool. You teach a great class on how to use AI, Rod. So we're all learning more about it. I don't think it's a panacea, though. People are still going to need people who are thought leaders in this business and in this industry for a good while to come.
Yeah, I agree completely. The human, what's going to separate us in the years to come is the human element. More than ever before, that will be it. It'll be the human element. And you can do that on social still. Brad, let's go to you for a second, because I know your operation. I know what you do. You have developed, and this is why Brad gets so much work done. We can talk about the Pareto principle and 80-20. You've developed processes and platforms and outsourcing. Touch of a button, these million things happen. So can you share why you did this? And then give us a little overview of exactly how much you've automated your practice.
Sure. Great question. I got to say, I really like Ken's analogies on social media. It's a freeway, not a vending machine. It's consistent. It takes time. Really like that. But to answer your question, so last year, right? You guys know deal flow was off the charts. We saw I think something like 336 deals that kind of hit our criteria at various stages in various markets. And we found, right, with time that as we run our traps, for us to go from initial identification to a closing, we have 223 tasks that we actually complete as part of both site evaluation, feasibility analysis, and our kind of due diligence process. And we just found that in looking at that many deals, there were bottlenecks in our prior process. And in a lot of ways, the bottleneck was either me or someone on the senior team, where they were just, kind of getting stuck in the weeds on performing tasks versus actually focusing on the deal and kind of checking to make sure assumptions were correct, market was correct. And so what we did starting, I'd say Q3 of last year, was we took a look at our CRM, we took a look at our marketing platform, and we took a look at our underwriting platform and realized that in our current situation, there were 3 standalone applications that had zero integration amongst the 3 of them. So we actually pivoted to a different CRM, which had integrations with our marketing platform. And then there's integrations both to our investor management system as well as our underwriting platform. And so that was the first step. Then the way technology has continued to grow, you can in essence automate a series of tasks, or at least assign automations to individuals on your team. So as an example, we're now at a point where, let's say we receive a deal, it's in a market we're looking at, it has the characteristics of our acquisition criteria or ground up development criteria. As soon as it's in the queue, we move it to a certain stage in our pipeline. And by doing so, it automatically triggers basically the first 4 phases of tasks to get us to an offer. And there's a team set up either in person, or we also have outsourced to some remote folks where those tasks automatically get assigned. So in essence, we can get from initial site to an offer in approximately 3.5 to 5 days, right? And that is running, I think, 46 tasks to get to that offer. And then more importantly, is kind of going back to process and procedure. One thing we've really started doing is elevating our members and training them so that, let's say I'm gone, right? They can still manage that task soup to nuts, whether or not I'm in the office or not. And so we do that through a lot of video trainings, a lot of one-on-one time, again, just elevating the team. But we're at so much of a point now where, if you were an investor, you came to us and registered, that entire process is basically you fill out a complete questionnaire, it's reviewed, you're approved, or we need more info within 24 hours, and then you're in our investor management system seamlessly. Same thing on deals. Second a deal is submitted, like I said, right? Those initial tasks to get us to an offer are done, right? Then we submit, then it's a whole other series that opens up from there. Same thing with our marketing. Now, because everything's integrated, right? Is let's say I'm working on a seller off-market deal or with a broker on a new pursuit. We have different sales stages in our CRM that at every stage triggers an email component or an email follow-up series so that let's say, we're chasing down a seller, we need the last, 12 months financials and a current rent roll. We have everything else, but not those. That system will automatically do the email management, contact. We have an assistant who can then call if we're not getting it. So it's just this kind of automated machine so that when deal volume continues to pick back up, we're eliminating those bottlenecks so that it's more seamless and we can continue to manage massive amounts of deal flow.
And while some of you may say, well, that doesn't apply to me because I do leasing or I do sales, Brad's different. Automation applies to everyone in our industry. It just does. Outsourcing, automation, getting the right CRMs. People ask, I don't think this is applicable, but what CRM system do you use? Brad, what is your tech stack?
So the CRM we use is Pipedrive. I will tell you, we completely reformatted Pipedrive to make it work exactly the way we want to. Our prior CRM, to give you some context, was RealNext. So in essence, there's a lot of components of RealNext that we were able to create within Pipedrive just on more of an automated standpoint. Our marketing platform is Active Demand. They integrate seamlessly. For investor relations, we use IMS, and for underwriting, we use Rockport Val.
Okay. Ken, question to you. What's your tech stack?
We use for the CRM a Salesforce.com version that we call Engage. And then, most of our communications, I use WhatsApp to communicate with some folks. I use Slack to communicate with others. It's sort of you pick your poison. And I have a team that does some of the analysis, so I don't have to get involved in that technology. And then social media, baby.
And I'll just tell you from our perspective, our tech stack is pretty robust. Yes, it's Slack for all our coaches and what we do internally, but also Infusionsoft, Go High Level is fantastic. There's all the automations we want. And now we're integrating our AI side into our Massimo mobile platform as well. But before we move forward, we got to introduce he was here and he was gone, but now he's back. Let's see. He's back.
There he is.
There he is. Bob, you there?
I think I'm here.
You're here.
I'm here. You talk about tech and my tech goes out.
I'm not going to ask Bob about his tech stack. No reason to go there. But Bob, do us a favor. For the very few people on the planet who may not know who you are, can you give us a quick 30-second introduction to who is Bob Knakal?
Sure. Bob Knakal. I've been in the real estate business 39 years in New York. I sell buildings. A little bit more than 26 years. I had my own company. Massimo Knakal Realty Services grew from Paul Massey and I and a secretary to 250 people in 4 offices. We ended up selling about 3 times the number of properties as the number 2 firm in the city over that period of time. Personally, I've sold, as of last week, 2,258 buildings in New York City, about $21 billion worth of stuff, and still love it as much today as I did when I started. So that's the good news. And since you were talking about tech stack, my tech stack is Home Depot. There's my tech stack right here.
And in total transparency, Bob and I have been working together for almost 12 years now, and we still talk every week, and we just work on whatever we work on. Hey, this is the point of the program, guys. I'm going to give you a quick commercial for the new book, Dominators of Commercial Real Estate Brokerage. It's available today. So this is what we're going to do. If you buy 10 or more copies, I am going to give you this is my pitchman side, right, Bob? I'm going to give you a signed copy of my #1 best-selling sales book, Knowing Isn't Doing, and actually a mug of Knowing Isn't Doing if you buy 10 or more. If you buy 25 or more copies, you get invited to a private workshop with others who buy those copies. And we're going to do a prospecting workshop just for your team. So there you go. But that's the commercial. Let's get back to the important stuff. Bob, we're talking about, and you're funny that you're sitting in that room. We're talking about what people did during the pandemic. And so, Bob, what did you do during the pandemic?
Well, I did something I wanted to do for 10 years. And first of all, I should say hello to everybody out there. Great to be with you today. Brad, Kenny, great to see you guys. And Rod, always great to see you, my friend. So, one of the parts of my practice that I've always been very active with is development site sales. And in New York, we don't have a lot of prairie land or farm.
Bob, we're losing you, buddy. Brad, take me to transition, broker, developer. Why? How?
So it was a total natural. It wasn't like one day I woke up and was like, I'm kind of ready to do something different. In 2010, right, we are right in the middle of the Great Recession. Velocity in deal transaction was down like 70%. I think we can point to a period of time where there was probably, at least in Phoenix, 2010, 2011, less than 50 transactions that occurred on the sales side. To give you some context, right? Product today, let's say industrial is trading for north of 150 to 200 bucks a foot. Then a steep deal was $55 a foot for a Class A industrial building. We were making deals at $35 to $38 a foot, like fully leased. That same deal today would be north of 200 bucks. And again, I'm still on the brokerage side. We had aligned ourselves with an institutional REIT who was gearing up to deploy a ton of capital in the Phoenix market. And they were global, right? Phoenix was just one of many. And we had devised this off-market pursuit plan where, in essence, we identified 125 distribution buildings that fit within their mold. And they gave me the latitude to write offers on all of those buildings, but we did it in a certain way because, right, they would have been like the first buyer to really come out all cash and close as an investment REIT in the last 12 months. And so to create some sort of, I don't want to say privacy, but separation, right, to kind of kick some tires is they also said, you know what, Brad, we know that you had done this 10 years ago. Why don't you reactivate that entity? Let's go and make a bunch of offers on these buildings through your entity, knowing that we will back you, ultimately take that LOI over, assign that PSA, whatever it is. And then by doing so, we will pay you a buyer representation fee of X. And that's what we did. And we're doing exactly what we did as a broker. We're making calls. We're identifying that we represent a buyer, national REIT, blah, blah, blah. We would write an offer. And as soon as we would get a response, I would loop in that REIT. In essence, we would take it from there. Now, as that kind of continued on for about a year or so, one day it was like, okay, after kind of talking through this with a mentor of mine, he's like, the biggest difference between a broker and an investor, and when I say investor, I mean like an active sponsor, manager, is just a simple mind twist of how you structure that initial deal. So I, in essence, went back to the REIT and said, look, I'm actually kind of looking to pivot a bit from brokerage and do more on the investment sales. So I'm already doing all the work on site selections and acquisitions. I'm writing the offers under my LOI. What if I just actually put that piece of property under contract, you and I form a venture together and proceed forward? And they said, sure. Obviously, we're going to have some controls in there because it's our money. That was the transition. Instead of just us, repping a buyer, I would control the deal and bring in the same buyer. And that model worked until we were ready to branch off and start doing more deals based on what we wanted to do versus just what our primary equity partner wanted to do. And then from there, it was just continued growth, platform growth, company growth. That was it.
So do you consider yourself no longer a broker? How long has it been since you said, I'm not broker anymore for commissions, I'm now just an investor developer? How many years has it been?
I've not brokered a deal in it's either 11 or 12 years.
Crazy. Hey, BK, you're back?
I think I'm back.
BK, you were saying, what did you do during the pandemic?
Yeah, so I sell a lot of development sites. In order to value development sites properly, it's really important to understand what the pipeline of deliverables is to the marketplace. And when it came to office construction, hotel construction, residential rental construction, very, very little publicly available information was around. Every residential brokerage firm in town does a condo pipeline report, but they all vary so much. It's very frustrating. You don't know which one to rely on. So for about 10 years, I wanted to get out into the marketplace and do a physical count of every building under construction in Manhattan so that I would have data that I could rely on relative to what the supply coming online. So during the pandemic, the city was a ghost town. I took the opportunity to drive and walk every single block of Manhattan, south of 96th on the east side, south of 110 on the west side. I looked at all 27,649 properties. I had a map with me in different color highlighters and highlighted everything that was under construction, highlighted potential development sites, assemblage sites. And when I was finished, I taped these pieces of map together. And as you can see on this big table behind me, the map now is 27 feet long, 10 feet wide. And I bring clients into this room, which has the map. It has the pipeline of deliverables for all of those food groups. It has development site comparable sales disaggregated into 5 buckets: the residential rental, condo, hotel, and office, and a miscellaneous bucket for healthcare, education, retail, and things that don't fit into the first 4. And I have that comp sale data going all the way back to 1984. So there are things people can get in this room that they can't get anywhere else. I opened this place up about 2 weeks ago. I've had 4 pitches in here, got all 4 pieces of business, and 3 of those decisions were made in the first 10 minutes of people being in the room. So I'm feeling pretty good about this initiative and looking forward to continuing to market this, talk about it, and improve the quality of the data we have. Since we did the walking tour out in the field, we've tracked every demolition permit and building permit. So it is very, very accurate. And I'm a big proponent of creating your own proprietary databases. I think third-party providers That data is lacking very significantly, and to provide your own database is the best way to get something that will allow you to differentiate yourself and really create value for yourself.
Awesome. So, Bob, can you just give me a quick answer? How long ago did you first start walking and driving? I know the answer, but do you tell us?
Day one, when I started it back in 1984.
Purposely to build that out, when you start driving during the pandemic, when was that?
Oh, so that was in late April of 2020. March 12th of 2020, we were told to go home for 2 weeks. That everything would be okay. We could come back. Well, that didn't happen. The city was a ghost town through at least the end of the summer. I mean, we were driving around. The biggest problem that we had when we were out in the street is there was no place to go to the bathroom because every restaurant was closed. Every deli was closed. There was nowhere to go. So I had to end up going back home to get into my apartment to go to the bathroom because there was no public bathrooms anywhere.
Look where you are now, sitting at development headquarters in a secret location, non-disclosed location in New York. But the point is, folks, is look, you're listening to Brad and Ken and Bob. They're doing things in a long-term perspective. That was over 3 years ago that Bob said, I need to do this. And now the fruits of his labor, his hustle, is paying off remarkably in a market that in New York is probably the second worst market right now in the nation, right? I would think after San Francisco, but it's paying off. Some of you just need to understand these dominators we have here and those in the book are all about long-term perspective and how it can be an authority, not a commodity. And that's the difference. And that's why they'll continue to dominate for years to come. Okay, Ken, I want to go to you. You talk about in the book this idea of emotional IQ and tactical listening. Help us understand that approach.
Well, people, first of all, do business with people that they like, that they trust, and that they respect. And the biggest way to build trust and to build a relationship is to be authentically interested in someone else. And I have taught my kids this, and certainly my team, the 70-30 principle. And that is when you are at a lunch with another professional, if you can spend 70% of the time asking them questions about their background, their career, their hobbies, their interests, their relationships, and listen carefully. And tactical listening is defined as not thinking about what you're going to say next, but actually listening to what they're saying. And 30% of the time talking about yourself, you will be successful. A lot of salespeople flip that and they talk too much about themselves, and that's just boring. Why would you spend 30% of the time talking about yourself? Well, 100%, first of all, is socially awkward, and second of all, makes you boring. They can't remember you. But if you will spend the time unpacking that person, people really assume that you're an expert. What they care is that you know about them and that you can remember that Johnny is playing baseball and he's in the 7th grade and he goes to this school. If you can remember that, you just see how people light up when you ask them questions about their family and about their career, because we're all operating with a set of insecurities that we're trying to overcome each and every day. And if you'll build that relationship and become a trusted partner, it's much more likely that they'll want to work with you in a professional capacity if you can build the friend relationship.
So the fact that we all know you're a diehard Georgia University football fan.
It's a bulldog.
It's a bulldog. It's a bulldog. It's a bulldog. Okay. So we shouldn't mention anyone's initials that are NS, for example, that we probably shouldn't mention.
Well, listen, it's a big world, but I wake up every morning and we're still national champions.
Yeah. Okay. There you go. Hey, Brad, let's talk about champions. You're being a champion. You've been a broker. Now you're an investor. We coach this in our program, but I want you to share with them. There are some investment brokers on this line. Hey, Bob Knakal's on this line. So they'll call Bob out. But what are some things you see different representing when you brokered investment sales versus understanding investment deal? So from a broker's perspective, are they doing anything wrong, or maybe wrong is the wrong way to say it? Other things they should be considering when representing an investor?
I would say, so going back, putting my broker hat on, when we were looking at deals, we were just looking at a snippet in time, right? We get a package, we're looking at trailing 12, we're looking at rent rolls, but we're looking at, cap rates and price per square foot and a period in time. Great investment brokers who understand their clients understand that there's typically a twilight on that acquisition, right? For us, our average hold time is 5 years. And when we lean on brokers for local market knowledge, the biggest thing that's kind of a pet peeve is to hear a broker say, I think. I think you can get this. I think you can get that. I think you can get this. Yet understanding us, right? We still have investment committee. We still have to go and present our findings to investment committee to ultimately get sign off to fund that deal. And so I can't go to committee with an I think. I have to be able to back up my think with data, right? Analytical data. What I love what Bob's doing is that if I brought Bob in and said, Bob, I need some assistance. We're looking at a development site in Manhattan. My guess is I'm not going to get an I think from Bob. We're going to lay out in the war room and Bob's going to pinpoint all the information I need to know. Here's your competition. Here's what's in the pipeline. Here's price per square foot. Here's where rents. Here's where costs are. And all of that stuff is quantifiable. So if I could say anything to brokers is quantify your I think. And I will tell you, you will start to get so much more feedback from your clients. We're not only look beyond the snippet in time, try to ask questions on what's your overall business plan? How long do you anticipate holding this? Do you want me to do an audit check on your assumptions based on local knowledge? Is there supporting documentation I can give to back up our assumptions? All those things would simply just make our job that much easier. And right now, especially as distressed opportunities are starting to hit the market, you need your clients to move quickly. And if you have that information in hand to help me get to a quick decision versus having to engage our entire analyst team to go and basically talk to your peers to get the same information versus going to you as the authority.
Brad, you know what? That is great because that's precisely what we're trying to do here in the development site sales showroom. Is basically you come in, you want to know what a site is worth. I can tell you what all the comps have been. You want to know what condos are selling for in the area. I'll have information on the comp set of 10 buildings. And I can say, well, this building had a higher cost of construction because it's 36 stories. You're only going to build 20 here. So your cost of construction is going to be lower. That was $583 a foot to build that in terms of hard cost. This one should be down around $475. And that one sold for $3,000 a foot. Here, we think because of reasons X, Y, and Z, it'll be $2,800 a foot. But we can let someone use their own judgment based on an avalanche of information that is all factual. And then what you're doing is you're basically getting to the point where like an appraiser will make an adjustment. How much better is this location than that location? Or how much more is it worth if you are closer to transportation than not? Things like that are where the opinion comes in. But if you're providing just a ton of factual information, it makes that calculus a lot easier to do.
100%. 100%.
Okay, gentlemen, we can ask you a final question. Let me give me some context, and I'll ask you all to answer this question. I was listening to a podcast from someone I follow closely now named Alex Hormozy. Highly recommend him. And he was talking about these top producers and the traits they have that go beyond dominate the 8 traits of top producers. But he said most of those that are the top ultra producers, which these 3 gentlemen are, and I strive to be personally, is 3 things. And one was they want to be the best. In fact, they want to change the world. They have the desire to have such an amazing impact, like Ken with his social media, Bob with everything he's doing, Brad's changing just lives with his investments. They want to change the world is one thing. Number 2, they all have a confidence issue. They all are just a little scared, right? A little insecure. I'll admit, I'm always insecure about, is it good enough? And so it drives us. And third is they recognize this is not a game. This isn't a lacrosse game. It horns over at the 4th quarter. It's done, right? It's not a baseball game that most times in the 9th inning, it's done. This is not a game, commercial real estate. This is a journey. So we're always striving to get better, as these 3 are. BK, I'll start with you. Why? Why are you still grinding? Why are you still hustling? Why?
Well, you know what? I just love this. I absolutely love it. And there are a couple of things. I would answer it in 2 ways, Rod. One, I've really enjoyed social media because it's a platform on which you learn, but you can also teach. And that's something that has always been very rewarding for me. One of the things I'm most proud of about the success that Massimo Group had is that now in New York City today, there are 14 investment sales companies that are either owned by or divisions of larger companies that are run by people who learn the business at Massimo Group. That to me is something I'm very, very proud of. And the other thing that really drives me is I am sickly competitive. I am a believer in abundance. I think there are two schools of thought you can have. One is that life is a zero-sum game and every win for you is a loss for me. I think generally folks who have that outlook are relatively unhappy. I believe that the alternative is you believe there's enough to go around for everybody. I believe that is the case. And certainly in a city like New York, where there's 165,000 investment properties, there is enough to go around for everybody. But I'm sickly competitive. And while I want to see other folks do well, I want to see them do well in every case when they're not competing directly with me.
Ken, why? What drives you? Why?
Oh, well, I agree with Bob. I love this business. I'm having fun. I get the opportunity to talk to some really interesting executives doing important things and the ability to go in that boardroom. I love the pitch. The higher the pressure, the better. I love going into that boardroom when it's a big deal on the line. It's almost as much fun as hunting quail. I mean, it's just a great feeling. And I would just say quickly, some things to think about. If you were worried, and we've talked about that a couple of times in this call, there's power in perspective. You heard Brad say, quit reading the headlines. You know, we're jumping off a cliff, but we're going to land it in a cool spring. Is there a different way to analyze this environment that we're in? There's something I've been thinking a lot about called ANTs, automatic negative thoughts, and trying to turn those into automatic positive thoughts and recalibrating how we consume information. The last thing I would say, and I love Bob's use of abundance mentality, paying your civic rent and giving back to not-for-profits is important, to other young people in the business. We all had a hand up. It's just part of the ethos that I believe deeply in. And any way that you can give back, and maybe we can talk about that a little bit more, because you can do well by doing good, for sure. Final thought, Rod, iron sharpens iron. Surround yourself with good folks, and you will be better for it.
Amen. Brad, why?
So I concur with both Bob and Kenny. This business is fun, right? There's not too many things we can do that you wake up every morning and it's going to be different. It's not every day that you can step back and go, I'm going to improve this. I'm going to change that. I want to do this better. I don't need to do that anymore. For me, growing up as a kid, one of my favorite games was I don't know if you guys remember Stratego, right? The blue and the reds, and you're marching along. And I would always play my dad of, you know, I got such a kick out of hiding the flag, like in the middle of nowhere, maybe putting a bomb here to throw them off. Like, I love that game of just strategy. And that's what this business is. You know, on a personal note, I don't know if anyone on this call knows this, but what drives me is I grew up in a very traditional family. And out of everyone in my family, I'm actually the only one who did not graduate college. In my 20s, I found it more fun to live in Huntington Beach, chasing girls and surfing every day, until I kind of got that out of my system. And then I have basically gone through CCIM. I've gone through self-paid my own way to learn different things. I've aligned myself with great mentors. But what I'm getting at is, because I'm the only one, there is a stigma that, you know, this guy, the black sheep, is going to be the one who's probably going to live on the corner underneath the cardboard box one day. And I wake up every day kind of going, you know what? F you, watch this. And that has driven me for 23 years.
I love it. I love it. Now, I know Brad's got to go because Brad and I are running this other coaching entity where we help brokers become professional investors. Brad, love you, buddy. I'll talk to you soon. I know you got to run, so we'll talk. Hey, guys, this has been great. Ken,
thanks, everyone.
Bob, folks, my why is very simple. I truly believe in my soul, in my core, that if you're committed to commercial real estate brokerage, you could definitely, if you wish, become a 7-figure producer. I believe that. You could build the business and life that you desire if you have the right guidance to do it. And that's why Massimo exists. Pure and simple. That's it. We've had the honor of working with such amazing people, including Ken and Brad, and of course, Bob. But our why is all to help you grow and move forward. Again, Dominators or Brokerage is available today. I appreciate you helping us out and spreading the word. Some great content, more stories of Bob, more stories of Ken, Brad, and so many more top producers in that book. Ken, Bob, thank you so much for your time and your support.
Rod, congratulations on the book, pal.
Well done, buddy.
Okay, guys, we'll talk soon. Hey, that's it. That's a wrap for this episode of the Massimo Show. Once again, hopefully you learned a lot of value provided by our guests, or maybe by me. But the key is this. As we say in Massimo, knowing isn't doing. So don't kid yourself. You have to go out and do the work. You have to implement what you learned if you want to get the results. And please, if you like this episode, please share it. Share it with your colleagues, share it with your friends. Heck, share it with your dog. Just share it. And we look forward to seeing you next time on The Massimo Show.